suppose it'd help if I turn my mic on. Oh, wait. I have to turn the music off, too. Hang on. It's on my phone. Hang on. Gee whiz! My phone won't turn off. Gee whiz, where's the music coming from? That is so funny. Oh, there it is. Stop. Good morning. G'day, mate. Happy morning. That was your 30 seconds of Metallica. Anyways, let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma. G'day, mate. Hello, hello, hello. Oh, yeah. How's your mum? My name is Wayne. I'm a currency trader. I'm with tradersway.com. Please visit tradersway.com. Why? They sponsor the Forex.Today YouTube channel. Why? They want you to be successful. Why? Because if you trade with Traders Way and you're successful, you'll be a fantastic client that makes trades and makes profit forever. Days and days and weeks, months, and years. And hey, a successful, profitable, happy client is the best client in the world. So they're like, hey, Wayne, why don't you help our clients be successful? Okay, I'll do my best. So anyways, that's why we're here. They're making it happen for you. Look at it as an investment into your successful future today. They're investing into you today. So pay it back, huh? Visit tradersway.com, open up a demo account, test out the execution speed. Fast. Check out the spreads. Low. You don't like spreads? You want an ECN? Get an ECN. They have it for you. What else? The swaps. Amazing swaps. Everything that you need. Tradersway.com. All right, today, ask questions, get involved, treat each other with dignity and respect. I will do my best to answer your questions. If you want me to cover gold, you got it. You want oil, you got it. You want a particular pair, I will do my best to serve. In exchange, I would like you to leave comments on the videos. I'd like you to leave the thumbs up thingy. What else? Subscribe if you're new so that you get invited to these events when I click the stream button. Hey, check it out. Remember yesterday I said, hey, when I'm looking down at the streaming software, even though I had 1,000 megabits per second, YouTube was like, hey, man, that's not enough. So I did. So thank you to the person. I forget who it was, and I apologize for that. But someone said, hey, go into the OBS settings and you can change how your output there. And sure enough, I jacked it up 500%. And YouTube's like, dude, this rocks. So good. Money well spent. Happy. So anyways, if this community is beneficial to you, if you like these webinars, if you find them educational, if you find them fun, if you like just hanging with people once a day that are interested in Forex just like you, then make sure you tell YouTube, this is it, man. This is the real deal. This is where I'm happy. This is where my home is. I want this every day. And the only way that YouTube tracks your happiness is those likes and those comments, okay? And numbers of subscribers. That's all they care about. Oh, and of course, how long you watch the video. Okay? So there you go, man. Get involved. If this is your community, right? Take ownership. So let's go to the charts, yo. Let's start with this. What's on your mind? What currency pairs would you like me to tackle today? Hola, Prince. Pig Dog. All right. Thank you, Andrea. McDonough. Yen crosses. Euro dollar. Pound CAD. Robin and Steelan's going for the pound CAD. Right on. First Kiwi CAD. Kiwi CAD. Everybody's going for it. Yeah. Aussie yen, oil. All Swiss crosses. Well, it's you're like, all of them? Well, you know, there's a 10 cent fee for each, so I'm going to have to charge you 60 cents. Anyways, all Swiss. He just throws them in there. Euro yen, happy smile. Very nice. So some crosses today too, huh? So I got you. Seems like lots of yens, lots of Swissies, some oil. No one said gold, huh? Euros are fine. You know, so yeah, that's good. Balance that off. Pissy, going for the pound Swissy. Happy to do that. Yo, 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 baby G, what's up? Euro Swissy, yep. The big ebb and flow pair. I hate Euro Swissy, man. I still haven't gotten over the Swiss National Bank. And it's been, I don't know, 6 years. If you weren't around for that, what an amazing disappointment. Like trillions of dollars were put on the table, or risked, right? Put on the line because the Swiss National Bank had a policy. They said, Euro Swissy will not cross this line. And they said it. So everybody in the world knew it. So you front run it. Why? Because there's a stated policy. So all of a sudden it got so ginormously big. Everyone was on that trade. And then on a Monday morning, a Swiss National Bank official, right, was being interviewed, and someone said, hey, man, the boat's really loaded on this Euro Swissy. Is this, line in the stand something you're still going to hold? And he said, well, that is still the central policy of our central bank. And everyone went, woo, because if that ever changed, we'd lose every penny, right? But they're like, hey, we feel confident in this. This guy just told us it was the central part of their policy. And I'm not joking, less than 24 hours later, the Swiss National Bank pulled the plug. No joke. I honestly thought it could have been another scenario where like capitalism died. No joke. I started calling people all over the place. Brokers were going out of business. Like seriously, holy crap. Brokers going out of business. Why? Well, that's actually evident that they're not entering your trades into the interbank system. They're actually putting you in a B book and long story short, a lot of no dealing desk brokers went out of business. You're like, well, I thought you weren't being a dealing desk. So anyways, that was actually one great sign for Traders Way because it was still pretty new in our relationship, me and Traders Way. And all of a sudden, brokers around the world were going bankrupt, like overnight. Even big ones in the United States of America, right? Big brokers. Why? Because just the Swiss National Bank screwed everybody and all of a sudden just all hell broke loose. So brokers were like $500 million in the red in situations where you're not supposed to be able to lose money while stops were gapped and everything. It was just a terrible mess. So I contacted Traders Way and I'm like, hey man, you should probably send out an email to everybody because people are freaking out like it's the end of the world and that you're going to go out of business just like a whole bunch of other brokers, like really big, well-named brokers went out of business. Ones with hugely profitable, tens of thousands of clients. And all of a sudden, the CEOs woke up the next morning and they were bankrupt. So I'm like, dude, Traders Way, send out an email. Are you guys okay? And they're like, yeah, we're totally fine. Not a problem. I'm like, well, why are these other banks going out of business? They're like, well, they're not entering their trades in the market. They're trading against their own clients. So now they're holding all that cash. So now they owe all their clients money. We enter our trades into the interbanking system. So we're not on the other side. The market's on the other side. So as a broker, we're fine. I'm like, oh, cool. You should send an email. So no joke. So there's like a real life example. Brokers with millions and tens of hundreds of millions of dollars all went out of business in one situation because of the Swiss National Bank. But it also revealed that Traders Way actually enters your trades into the actual market like they say they do. And yet a non-dealing desk broker, I won't mention who, someone in the United States, probably the biggest broker in the United States with a non-dealing desk model, somehow went out of business in one minute. Why? Maybe it was a dealing desk. Anyways, whatever. So that's Euro Swissy. I still got scars on that, man. But just amazing, guys. Just amazing that the Swiss National Bank did that, right? That'd be like the Fed coming out and like, we are absolutely not going to cut interest rates. And then 18 hours later, slash interest rates. But it was 10 times worse than that because they They allowed the market to build up for like 2 years into this ginormous position. And then they just went, and everyone fell off the cliff. Wow. It was amazing. Amazing. Anyways, let's start here. Then we'll do those currencies that you asked for. Okay. Let's start here. Like oil and gold, they're important sort of benchmarks, right? Luis said Alpari went bust. Yeah, that was one of them. Lucas, FXCM, shady business, awesome platform. Yeah, because I've been to the offices and I met Drew Niv and all that kind of stuff. And it was funny because there was a time when Deutsche Bank wanted it into the U.S. market. Let me change this angle here. No. Deutsche Bank wanted into the U.S. market. And they're like, so who's the biggest? And they're like, FXCM. They're like, okay, let's buy FXCM. So they show up. Can you imagine the Germans? They show up to the FXCM offices, and they had this partnership for a few years, and they showed up to the FXCM offices, and they're like, whoa. not the German culture, right? So long story short, that didn't last very long. It was just funny. Hey, what's up? Gashaw, am I ever going to answer your question? I hope so, my friend. There are other people here too, and I look up at the chat as much as I can, but often I'm looking at the chart. But you are my favorite, Gashaw, so ask again, and hopefully I can get it. Okay. Tom Sadie said, speaking of brokers, is there software that we can compare execution speed with? Yes, and for the life of me, I can't remember where or what, but I had some data from a third party. This was, I don't know, 4 years ago, and it ranked everybody. And the biggest brokers were really slow. Okay, the biggest brokers you can think of, they were actually quite slow. Then you had I think because they just had so many traders on one server, right? And then you had these cheap brokers, the ones that are like, oh, we only charge, 1/4 of 1 pip. So they get all the cheapies into this bucket. But then they were so slow because I think they were slipping you on purpose. So they tell you they charge you 1/4 pip, but then but because of slippage, they're actually keeping like 2 pips, and you're actually paying more than you should be. So anyways, so there's all those guys. And then Trader's Way was not the fastest, but they were like way, way up on that list. Now, I can't remember what it was. I think it was a service I was paying for that allowed me to see like big bank positions. I can't remember what it was. I think it was that group. And they had a bunch of tabs, right? And one of the tabs was that, and there was this big list. But I can't remember. Man. But it was good. Oh! Gashaw, that type of question, you're asking me to make a decision for you. You're not paying me money, so I'm not going to make a decision for you. That's your trade. Do your best. Okay? Now, I'll teach you how to make the decisions, but to tell you how to manage your position, I'm not your mom. I'm not your lawyer. I'm not your accountant. I'm not your priest. I'm not your bartender. Okay? So, we can talk about that later, but let me focus on what we're talking about now, and we'll get to it, okay? All right. Here we go. So, we are watching, where's my drawing tool? We are watching this oil slowly climb towards $60. Okay? Yeah, Tom said he big bank positions. Yeah, and trust me, most of them suck beyond belief. They're terrible. Absolutely terrible. Here we go. Your guardian angel. That's a good one. All right. So I got my drawing tool ready here, guys. So these are not great moves. Ooh, look at that. That kind of looks like crimson. These are not great moves, but they're not bad moves, okay? We are finding support. We're trying to climb our way up. Remember, I said if we get up here to about 59, just shy of 59, it's probably time to take profit on this on the medium term, if you will. And if I clear this out, what other things do we have here? Well, we have the higher high, higher low, which works for me, off of a roll reversal. That works for me. And then on a daily basis, or no, sorry, on a weekly basis, we want oil to stay above this line. It's very, very key. It's very, very significant. Anything lower than that, and I would assume range bound. Okay? And range bound I've also identified as here to here. Okay? So it looks more like it's trying to... Now, of course, I'm looking at this through the filter of a bull, right? Confirmation bias, you're going to see what you want to see. You have to realize it's there. So I might be... this might be a Nietzsche situation, but I know that, all right? So anyways, what I would like to see is this and this and this. What I think we'll see, or the way I should think, is more the answer, because remember, if you consider this rangy, we will stay in the range forever. So what, you know, this is more likely, but either way, they tell me things. This says we're staying in the range. This one says I buy a dip. Okay? But it is confirming that in general, we are moving in the upward position. Again, moving from the big 50 number to the big 60 number, which was the basis of this whole trade, if you remember. I asked you guys straight up, you need to make a decision. We're approaching 50. You must make a decision. This is your line in the sand, do or do not. There is no try. Is it going down to 40 or is it going down to 60? And everyone's like, whoa, it's going to go to 60, not 40. Then you're a buyer. That's called a bias. And ever since that, then you're buying at support. Okay? There's support, there's support, there's support, there's support. Oh, well, this was support. Oh, let me get rid of this. Okay? So that's a little bit more than we want. This is support, and next week, this is going to be support. Okay? And we're working our way up, climbing the ladder. 1 week at a time. Until it stops. Okay, and then, of course, we see this huge cluster of resistance up here near 59. Doesn't mean we can't get through it. It's just when you need to wake up and smell the coffee before you wake up and smell the concrete. Okay? Luis says the entire stock market is range-bound. Well, a couple of things going on here. One, we have another testimony with Powell. Two, we're waiting for a Trump deal. And three, we have the impeachment stuff. It was funny, last night my wife says to me, did you watch any of the trial stuff or the testimony stuff? And I said to her, no, but I pay very close attention to it. And we were talking, and then I realized, I'm like, wait. She's not talking about the Powell stuff. I'm like, are you talking about Powell testifying to Congress about to the budget committee? She's like, no, I'm talking about the Trump impeachment stuff. I'm like, oh, whatever. Okay, no, I didn't pay attention to any of that. It's so political. It's funny. I can't. I guess I need to pay more attention before I comment. But you know, when you think about it, like Clinton almost got impeached because he had inappropriate relations with an intern, right? I'm like, I thought that's what interns were for. Like, and then he lied about it. I'm like, that's what everybody lies about their mistress. I mean, that's what, and is that even impeachable? Like, Clinton had some whoopee with his intern? I'm like, you're kidding me. Like, that's impeachable? Like, did he murder somebody? Like, that's bad, right? So anyway, so the Trump thing, I'm like, oh, he pushed the Ukraine around? Yeah, of course he did. Gee whiz. We're America. This is the United States of America. Of course I'm going to push you around. Gee whiz, right? So anyways, then even if even if it's wrong, is it impeachable? Like, so whatever. So I'm like, no, I don't watch that. Yeah, I mean, that's right, quid pro quo. I mean, of course. Yeah, we're lying under oath, whatever. They're politicians. They're all a bunch of liars. Yeah. Well, the thing is, no, I'm not going to say this under recording, but anyways, there's a lot of stuff going on through the Ukraine, and there's a lot of people on both sides taking money from the Ukrainians. So let's just say it there. Biden's definitely doing it, but a bunch of other people are definitely doing it too. So anyways, maybe. Beep, beep, beep. All right, so let's move on.com. Oil, still more bullish and bearish. Yay! Okay, cool. Gold. Making the music, abuse it, but you can't do what you know. All right, yeah, so gold, we talked about it several days ago, last week, in fact. That, okay, we have to say it again, repetitive is good. There was the obvious entry based on last week, right? There's a great reload last week, but last week we also knew this was the likely target. So this week we enter the trade out of position, hit the target, then we talked about this where this is a profit-taking zone. This is where you should get out. It could potentially, maybe, because it happened on a Monday or a Tuesday, that this could be a counter trend, but I don't like counter trends. You could do it, you could look for it, you could set it up. I don't really like it, but if it did counter trend, it would go back to the central pivot. And so think about it this way. So what is it today? Thursday? Oh, swing trading group day. Hey, swing traders, we're going to meet today. Whoop, whoop, whoop. Swing traders. Okay, we're going to meet today. Put that on the calendar. Okay, but anyways, so we started this week seeing this as a support, a place to get out, and a potential for a role reversal this way. So you got your double, triple bottom, inverse head and shoulders with a role reversal, and now we're up here. Cool. I said you could set it up. I said you could do it. I said I don't like to do it, but you could totally do it. That's what you look for. Fits the rules of engagement. Now time has passed. Once again, if you just were there and you planned it and were patient, it presented itself. Okay? I don't like counter trend trades because I'm a trend trader. That's why I don't like counter trend trades. Look, I like to enter a trade and I say, okay, well, we're here. So this week's target's here. This month's target's here. That's what I'm in it for. Okay? Now, a counter trend trade means I'm buying and everyone else has been selling. So to me, I think in my book, I say it's twice the risk for half the reward. So just think of that attitude. I want this sound to be good for you guys. Wondering if I should get an even better microphone. Anyways, that should be over there. Anyways. All right. So like twice risk, half the reward. That doesn't smell good to me. I want to scrape that off my shoes if I can. But sometimes you're just like, hey, man, I know this is going back to that central. So like as a trader / investor, I don't like it. But as a scalper, yeah, you can pick up those pennies. Sure, why not? Okay. Okay. So, right? So let's put this in context, make sure that, right, that this clicks in. This is an obvious entry. Okay. This is the obvious exit. And we knew all of this last week. It's Thursday. So we're talking last Thursday, last Friday. We knew that this is a place down in here where if you were a bear and you had made a lot of money, you should stop trading. And in fact, you should take money off the table and put it in your pocket. How many people agree with that? That was the basis of last week's conversation. That even if you made a ton of money it's time to take the money off the table, walk away, put it in the bank, get it out of the market. We knew this, not even just last Thursday or Friday, but at the beginning of the month. Okay? Great. So what's the next step? That's kind of like the first thing, right? Well, this week, we still know that this is our line. Now, can it go lower than that? Oh, yeah, faux show. But what? Oh, I remember this. We were talking about this where I'm like, what's the potential? What's the odds? What's the something? And I think I went into a poker analogy and stuff like you got a 3-7 go right, and the other guy's betting big. Like, do you stay in or do you fold? This is sort of like, yeah, it could fall further, but I'm like, nah, I don't know. The odds are not good on this one. I might as well just take the money, right? So anyways, we have that in this sets up this mindset now of tactics, because your strategy as a bear is out, which to a bull is the first step of maybe an in, because you know if the bears are leaving, there's less people to fight you. Your odds are increasing if you're a bull. Doesn't mean you should do it, but your odds are better simply because there's less people playing, right? So you might have a 3-7 and everyone else folds and it's you and this other dude. Now it's a 50-50, but your hand is still crappy, right? But you're like, I got a 3-7. This guy's betting big. He's got face cards, right? And I got a 3-7 off suit. You can stay in the game. It's 50-50. One of you is going to win, but it doesn't mean you should do it, right? So anyways, but this mindset is this is a place where it could reverse. And under these rules of engagement, and this being a Tuesday, that you can look for the counter trend. Okay? So, where's the reversal pattern? Huh? On a 15-minute chart, if you were a bull and you were doing your job and you were watching these trades and tactically on smaller time frames like a 15, it consolidated for an entire day. Let's zoom in a little bit more. Okay? It consolidated for an entire day, and then what? Is that a breach? If you were watching this like a hawk on a 15-minute chart, one finger on the trigger, would you consider that a breakout? You see how important bias is? That you had to be like, I'm going to do this. I'm ready. That means you've already made the decision. You're not sitting around like, well, what does the MACD tell me to do? The MACD doesn't tell you to do anything. It just is a MACD. Okay? So if you're like, all right, under these situations, there might be a counter trend trade. I'm a bull. I believe bears are going to start taking profit here. So I'm going to look for first consolidation and then a sign of reversal, right? That's it. That makes sense. Right? Right? That makes sense. What do you do after the breakout? What have I taught you to do all these years? What's the next step? Retracement, extension. Okay? Now check this out. By the way, this is straight out of the price action training course at fxbootcamp.com. If you don't know price action, you don't know how to trade. This comes back down, up. Now what? Okay, we're looking for this now. If you're a counter trend trader, okay? Now, because I'm a trend trader, I believe that at any moment this can change direction and go back in the direction of the trend. Now, why would I, if I was a bear last month, what would I be doing now in the middle of the month of November if I was planning on selling this again? Because I made a lot of money last month, I want to make a lot of money now, right? So what do I do next? What's my next move if I'm still a bear? Type in a question mark if you don't know. I will look for a sell entry. Yeah, well, yeah, but like, where do you set that up to make money? Right, no, homie? Look for, yeah, well, there's more to it than that. You're forgetting the why. Sell at resistance, but what resistance? I mean, all of that's true. Yeah, of course, sell at resistance, but this on this time frame is up. So you can't just sell on the way up, you sell on the way down when it, right? There's a difference. Thank you, DeSmit Robin. Next month's privates, you start front running December. Whoa, 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 whoa. Whoa, 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 whoa. Whoa, right? If I were me in the future, what would I be telling myself now? And I would say, this looks good. And this looks good. So somewhere between 75 and 15, right? Between 75 and 00. As a bear, I would look to short again. So that means within the next 2 weeks, you ready? Within the next 2 weeks, if I was a bear, I would be expecting something like this. Trend trader. Jimbo says zoom up. Or zoom out, it's an uptrend. I know. What's the difference between this period and our current period? Fed policy. So the technical trend is less relevant to me. So we're in a battle of, is the Fed going to cut or not? And the market's trying to figure this out. Okay? Yeah. See, this is why I don't use yearly pivots. I mean, I'm not hard fast on that. I might look at them. I've never actually looked at an annual pivot point. Because like what happened last year versus this year, we're in different markets, son, right? We're not. You have to understand that I use technical analysis to enter my trades. I don't use technical analysis to make my trades or to define my trades or tell me to make a trade, right? So looking at last year's M3, and of course now it's November, so we're talking based on all of last year, and we're almost done this year. Like, we're in the Thursday of the year, right? I'm never trading Thursday's pivots on a Thursday. I'm trading Monday's pivots on a Thursday. So like, to say what happened last year will predict what happens this year, I'm like, why? Things are different, right? Last year we were raising interest rates. Now we're cutting interest rates. We were happy with China. Now we're not happy with China. Like it makes no sense to me, right? So I make my decisions fundamentally, and then I use the tools of the trade, right? It's sort of like, let's see, a plumber. It's like a plumber coming in and just starts tightening things to prevent a leak. And someone says, why are you in the kitchen? The toilet's leaking. Yeah, well, if I tighten enough things, it'll work. It'll fix itself. Like, no, you're going to have like a fundamental strategy here. Let's look at the toilet. Where's the water coming from? Is it coming from under the toilet or from the pipes around the toilet, from the tank? Like, right? And then you start using your tools, right? So I don't know if that makes sense. Juan says 97% say they're not cutting. You're looking at December, right? I don't care about December. Why is it that I don't care about the December Fed meeting? Because that's already priced in. They're already negotiating those deals. What I care about is the next meeting. Like, what is it, the third week of January, isn't it? Somewhere around there. So that's what I'm concerned with. So I don't care about December. December's done already. I've moved on. Yeah. Well, to think of it this way, to get that number, contracts were already negotiated. That's what the number comes from. It's not a forward-looking guidance. It's what's already been negotiated. Therefore, it's already done. So I'm much more interested in like the January, March, and May prices. And those fluctuations are telling us their opinions, okay? Okay? So Emil says 81% in January, but that was 50-50. So now it's 80-20. That's the news. Okay? That's why I teach you guys to always, don't worry about today, worry about tomorrow. Don't worry about tomorrow, worry about next week. Don't worry about next week, worry about next month. So on gold, you might be trading a 15, a 5/8, or let's say 21.55 cross on a 15-minute chart. I'm looking at next month's pivots so that in the next 3 weeks, I can get short. Okay? Now, this tells us something that I may not want. For this to work, the Fed would cut interest rates. Okay? So what's plan B? Okay? I'd be happier with that. So if you're a bull, okay? If you're a bull, that's what you're setting up now. You see, like, you're so far advanced. You're not thinking today. You're already saying next week will be an up. We'll hit, let's say, the M4R2. Then the week after next week, it will retrace and kick off 1475 as support. We'll go from 1475 to maybe 1550. 1533 to 1550. So you're already now got 3 weeks of gold planned strategically. So now tactically, you can either just measure what's happening using your technical analysis or participate using technical analysis, right? So if you were a bull and that's what you want to happen, you're in high risk trades here, but up here you're definitely buying dips. Okay? If you were a super bull and you had this planned out 2 weeks ago, not now today, but 2 weeks ago, you'd be setting up the counter trend now and you'd be buying dips like a son of a gun. Up, 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 down, down, buy. 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 Up, 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 take profit, done. Merry Christmas! And right in there would be a Fed meeting. So Peter DeVries says, for this to be a bull, the dollar has to weaken. Yes. So if the Fed's done cutting interest rates, then the dollar will weaken. Exactly right, Peter. So Andrea says, so when the Fed cuts interest rates, gold declines. No, it goes up. So that's what I'm saying. for this to go down might go against your fundamental analysis. So now you got to wait and use technical analysis to confirm or deny your bias. If you don't like the word bias, use hypotheses. So you should say, wait. Why is gold coming down if the Fed's cutting interest rates? Or stopping, if we're at or near the end of rate cuts? You're like, this is not congruent with my hypotheses. So now I'm either wrong in the hypotheses. So if you're looking to be a bull and this is making lower lows, you just don't have to be a bull anymore. You just wait. This is the beauty, guys, right? The way you trade might be risky. The way you're supposed to trade is you look at this and say, well, I think this should be bullish, but it's bearish, so I'm not going to trade. What's stressful about that? So now you just got to sit and wait, and you tell the market, because you're the boss, you're like, hey man, this is going the wrong way, market. Therefore, I'm not going to participate. You are not fulfilling my basic demands. Okay? The market then says, okay, well, we'll have it down and then an up next week. Now will you buy? And you're like, okay, that's not perfect, but I might be into that. So you buy that next dip and you swing trade this way, the next week. Okay? And you're like, okay, right on. And by the way, this is the monthly counter trend, right? So you already got that planned here. So you might actually be trading that now. That's the monthly counter trend, not just the weekly counter trend. Cool. But like I said, you don't need counter trends. Why? Because you're truly a trend trader. You know, like entrepreneurs get a lot of things wrong, just like a lot of new traders get a lot of things wrong. And for example, they'll come to a venture capitalist and say, well, we're the first mover, so we have advantage. And I say, what? First movers don't have advantages. And they're like, yeah, well, we have the whole market to ourselves. And if they have an MBA, some idiot will come out and say, well, this is a blue ocean strategy. I'm like, really? You're overeducated and have no experience, right? So anyways, what happens is even if you have the world's greatest product, you got to develop it. You got to make it, which means you're going to make a lot of mistakes, which means more money for me. As your venture capitalist, more money for me, more money for me. And then finally, we make the world's greatest product, and the world doesn't even know it needs this product. So now you got more money from the venture capitalist. Now you have to give the VC gives the new startup all this money. They have the world's greatest product. Everyone needs it, but nobody knows they need it. So now you have to then educate the whole audience, the whole world, that this is the greatest thing you need. You don't know you need it, so let me tell you why you need it. And you spend all this money, and then right at the brink of collapse, this new company with the world's greatest product needed by everyone on the planet runs out of money, and then what happens? The second company comes in, copies all the same ideas, doesn't make even half the amount of mistakes developing it because they can see the other one. They're like, oh, that was good. We can even improve on that. So they come out with a better product, and the audience has already been trained that they need this product. They're like, well, this company's going out of business. What do we do? Oh, well, there's a new version of this company, and it's got even a better product. You're like, and boom, we'll go with that one. And the second and third mover almost always has the advantage. It's a fallacy that the first one in makes all the money. That's nonsense. So the same thing, like, you got the world's greatest product. You're the only one on the planet that knows this should be going up. And you're like, I can't believe this is going down. Can't they see the Fed funds rate? I mean, if you look at the DEES, if you look at the GEN, if you look at the MAR, gold should be going up. I mean, it's so obvious is what your hypothesis is. And then this is making a lower low. So should you be the one getting in on a lower low? Hell no. You're like, well, first mover advantage. Well, that's the most expensive, dumbest thing I've ever heard of. Okay? So why don't you wait for it to be a bull? The market now. You're like, I'm not getting in first. Not me, not my money. So you're like, right? So you have a dialogue with the market. And the market says, well, what could I do to get you interested in buying? Right? Well, I'd like to see a higher high. I'd like to see a whole bullish run, M2 to M4 next week, and then maybe I'll buy a dip. And if that dip works, I might be into this. And in fact, I might be going here, but not on this month's pivots, next month's pivots. Okay? Yeah, Pioneers actually, right? JP, I forget, some Harvard guy 100 years ago said Pioneers, right, are the are the guys face down in the mud with arrows in their back. Okay? So you see, guys, like, you need to be the boss. Video games are for kids, right? Which is nonsense. I love video games. But anyways, Forex is not a video game. You're the boss. You're like, I'm going to be a buyer here. I've done my research. I have my knowledge. This is supposed to be going up. I don't like these market conditions. I'm not going to buy. Okay? Now, think about this in other situations like real estate. You have to make $1 million decision. Sure, you only have $200,000 of your own cash in the game, and the other $800 comes from the bank, but you still have to make a decision. Do you buy or do you not buy? What considerations do you make before you pull the trigger? The cost of your money, whether the neighborhood is going to go up in value or down in value. That's a big part of it, guys. There's a whole cycle you can study on just neighborhoods. And there are things you can look at to determine 30 years from now if the neighborhood's going to be worth more, or 30 years from now the neighborhood's going to be worth less. There are things to do if you're educated in the real estate business to help make that 30, 40, 50-year decision. Okay? But you come to a decision. You don't just guess. Right? Same thing in here, like, you're saying this is going to go up, yet technically this is going down. How do you reconcile that? You could do it through degenerate gambling, or you can use scientific methodology. Okay? Oh, you usually watch offline, but well, I'm glad you're here today. Welcome. Oh, hey guys, would you please subscribe? Will you please like? Will you please comment? Only half of you have clicked the like button today. Okay. Would you please click like? And also, thank you to those who left comments on yesterday's video. They waited 20 seconds for me to post the link, then they clicked on it and left comments. Thank you, and hopefully we can do that again today. JP says, actually, most people just guess. Yeah, that's why there's dumb money everywhere. I love it that people are out there buying real estate right now. I hope they fix it all up. Okay? Someone bought my house before me, right? With a mortgage significantly more than what I actually paid for the house, right? Amazing. And then spent hundreds of thousands of dollars fixing my house up for me. Awesome. This guy's actually running for city council now. It's great. So anyways, is that a good mathematical equation? No, not for him. So he lost hundreds of thousands in cash and then still pays the bank mortgage on my house. Love it. Hey, I don't know if he's a good person or a bad person. I don't know. I don't know anything. But I know the equation works out better for me. So if anyone's out there buying houses now in a late in the cycle, if there's a dip down the road, they might be in a world of hurt. But if you're a buyer because you're a little bit smarter and a little more patient, and you have a little more liquidity, when these markets decline, There'll be a deal. Now, I don't think during the next downturn, which is coming soon, you're not going to see a repeat of what we had in 2008. So in 2008, the bond market froze, the repo market froze, the credit market froze, banks were not lending, and only people that had cash could buy. So it was a fantastic time for me. So this next time, it won't be a credit crisis. It'll just be part of a business and real estate cycle slow down and all that kind of stuff. And not everyone in the world will have jobs. You know, some people will lose their jobs. Why? Some companies suck. Right? So it's a normal thing. So the next time the market will decline and anyone that invested too late or put too much money in will not see a return. And if they can't afford that decline, then they'll have to leave that investment and someone else will buy it cheaper, but will get that intrinsic value built in. So like, let's say someone bought a $500,000 house, put $200,000 into it, renovating it. So now they have $700,000 into it. Then there's a market decline and they can't afford mortgage now because they lose their job. And they can't afford a $700,000 mortgage. So they go to sell it, but prices have fallen back down to $500,000. So now you come in and you're like, well, I'd pay $500,000 for this. It's a really nice house. Look, it's been fully renovated and new appliances and everything. This is nice. But someone's lost $200,000. So someone's going to buy it for $5,000 and have that intrinsic value, right? And someone else has just got a $200,000 loss. Whatever. So correlate that to these trades, guys. Is this the right time to buy? Well, maybe there is a bottom here, but doesn't mean it's up from here. So if you were a buyer, what do you need to see to confirm? Okay? This is what you need to be asking yourself now. What do you need to see next week? Don't worry about today and tomorrow. Dude, you should already have that planned out. So what do you need to see next week to make you a buyer in this market? Would you buy this on Monday? This is the question you need to be asking now. What's happening today is already planned out. You planned that out long ago, right? If you open up your charts and you're like, I wonder what we're going to do today, you've already lost. It's just a matter of time. You need to be planning out next week. This is what the Swing Traders group does. We will be planning out next week later today. That's why we meet on Thursday. All right, so let's do, we had a lot of pound questions. Pound, but not pound dollar, right? Was it pound Swissy? I remember one. And then pound CAD, I think, was another one. So why don't we just go to the pound scan. How does a lien get cleared? You pay it off or you declare bankruptcy? That's my guess. Okay, pound. Okay. This is pretty cool, right? So we had two forces going on here. One, we have the short-term force of this, right? What we call the correction, right? And then the long-term force, which we call the trend. Oops, I wanted that in blue. Okay. See how lovely this is? Okay. This is the fractal geometry of the market. This trended beautifully down on, let's say, a 15-minute chart. And yet on an hourly chart, it was also trending beautifully up. Oh, right on. Good job. I used to know East Palo Alto was really an amazing thing. And I think it's changed over the years. But East Palo Alto used to be really, really rough. And I think maybe around the time they started putting IKEA in and a bunch of other things, it started to change. And then all of a sudden, I think there's some overflow from the rest of the Bay Area. But I think when I moved there in 91, not East Palo Alto, but the Bay Area, it had a certain demographic. And then the demographic changed. And then the demographic changed again. So very interesting. Oh, is that right? Is that where they put Facebook? Okay. But it was... No, that's not true, Ron. He owns, right? So he owes, or he got cleared. But no, the lien's not on me. The lien's not on my house. So he just owes. He's paying that mortgage. Now, I think he's a pretty wealthy person, or reasonably successful business person, and now he's on city council and stuff like that. So he knows all the people around here. So I'm sure he's long since paid that off. But put it this way, I bought the house for less, I think 40 cents on the dollar. Really? And so someone lost. The bank lost money and he lost money for sure. But is that going to happen again? No. Okay. So I want to show you this fractal nature of the market. Okay. And then you can look on the smaller time frame. And let's go to more like a 15-minute and see if I can get that other move down. Okay, this was great. Oh, and I'm glad I drew it this way. Beautiful. Okay, here's a beautiful swing trade, short, target. Beautiful swing trade, short, target. What about this week? Beautiful swing trade, target. Does it mean you're wrong? No. That's what I love about swing trading. First of all, you're only trading your bias. So most likely you just hated the pound with Brexit and stuff. That's cool. So this, as a bear, you sold in here. As a bear, you sold in here, right? With either the first one or the second one. And as a bear, you were looking to do it. Most likely you did it on Monday. And now you've been busted out. You stopped trading. So you made money this week, or 2 weeks ago. You made money last week. And this week, you broke even, or you lost a little bit. Not much, but you still made money here. You still made money here. And at the end of the month, you had a positive month. This is where we need to get you. Many traders that don't have a bias, their trading looks like this. Long, short, long, short, long, short, long, short, long. Okay? Right? And to get all of this timed up is not an easy thing. It can be done. It will require that you're in front of your charts, focused intently, nearly 24 hours a day. Oh, and I've done it. And I've done it for years. Okay? But there's a level of skill and time commitment and focus that's required that I think most people just don't have. Right? Andrea McDonough is a realtor. Renault. All liens have to be cleared in order to have a clear title, which may be required by any mortgage. So then I don't know his story. All I know is he put the money in, and I didn't pay for a penny of it. So what happened after that? Don't know. You see what I mean? So how does it work in reverse? Let's say you're a bull. So let's make it green. There's the dark green. Okay. Maybe you bought it in there and quickly got knocked out of break even. Maybe you bought it here, probably got knocked out of break even. Then you bought it here and you made money. Why? Because you're a genius? No. So, right here you broke even. Here you broke even. Notice you have like a full day to move your stop or to recognize on a smaller time frame, yo, this ain't bullish. Plus, you already know it's making lower lows and lower highs, so you're not very aggressive, right? Then you get down in here and you do it again, and you're like, oh, this week it worked. Okay? And that's what consistency in trading will bring you, right? I've told you this many times, and I hope you write this down. It's not about being right. Trying to be right will not lead to profitability. No, right? And this is what people are trying to do. They're like, I should have known to buy here. I should have known to buy here. I should have known to sell here. I should have known to buy here. I should have known to sell here. And the thing is, there's so many variables that may be nearly impossible. So the other way of doing it, instead of trying to be right all the time, you try to be consistent, which means you've done your fundamental research and you are simply a bull because you believe the Great British Pound is overbought. Okay? And let's look at this differently then. Okay? So you're a bull, you believe the pound is way oversold, and that London's not going to turn into a ghost town. Okay? So you were a buyer here, you were a buyer here, you were a buyer here, and 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 you were a buyer here. Okay, which ones made money? Let's go find out. Did this one make money? Yep. Did this one make money? Yep. Did this one make money? No. Did this one make money? Yeah, break even, I think we'll call that one. We'll put BE. Okay, did this one make money? Yep. Did this one make money? We'll call that BE. Did this one make money? No, that one lost. Did this one make money? No, that one lost. And did this one make money? So, okay, lost, lost, lost. So we have 3 losers. Okay? Let's do this differently. Okay, we had 3 losers. How much do you lose on a trade? 50 pips? All right, times 50. So you lost 150 pips there. Okay, you have 2 break even. 2 times 0 equals 0. Okay, so a total loss of 150 pips. Okay, now let's look at the winners. We'll just throw down some quick numbers, right? Right, what is this? So you bought it at 180. It went to 184.5. So I don't know. We'll call that 400. This one went to 182 to 183.5 and back down. That's the break even. Oh, there's a loss. Let's add to that loss. Is it still black? No, I'm on blue now. Black. This is a loss. Because that was the break-even. This was the loss. But that's a small one. But anyway, so let's do 4 times 50. So you're out 200. There's the eraser. There we go. All right, so you're down 200. Okay, this one's what, 400? This one, you're at 84.50, 90. So let's just put that one 500. Break even. Okay, we got those. And then this one you bought at 86.50, 87.50, 88, 89. Well, let's say another 300. So what was it? 400, 500, and 300. Right. So you made 1,000 pips. Okay? So this was, so you had 1,200 winners, right? You had 1,200 winners, minus 200 in losers. You walked away with 1,000 pips. Because you were right? No. Why? Yeah, 1,000 minus the 200 that you lost. Okay? You were not right. You did the same thing week after week after week after week. Some weeks you made a lot of money. Other weeks you didn't make a lot of money. Some weeks you lost money. But you were very consistent. You had a fundamental bias and you traded it. You used technical analysis, know when to buy and to take profit, right? Or let it run forever, actually, right? All that kind of stuff. So, right, that was a gross simplification and it wasn't perfect. And if you wanted to fight me on all of that, you could find tons of reasons why. But if you just lay down and submit, right, you get the idea that I'm trying to get across. You don't need to be right. You need to be consistent. And to be consistent, you have to have a bias. A bias leads to strategy. Strategy leads to tactics. And over the long run, over the course of a year, you will have a profitable year. You might go through a month where you don't make much, but you'll probably make something. And in other months, you'll make a lot more. But it's not you. It's the market. You're trading the beta, not your alpha. Your alpha is your ability to outsmart the market. And that's where bankruptcy lives. You are not smarter than market. You're not big enough to move the market. You can't push the market around. You don't have the big stack. You're a small stacker, right? So what you can do? What can you do to survive? Be consistent. So like I've said, when I play poker with the buddies, I never win. I think I can't say never. I've only won once or twice out of, 50 games or something, right? Why? Because I play the way that I trade. I also never lose. I always walk away with at least the amount of money I put in, usually a little bit more, but I don't win the whole thing. There's no fireworks when I win because I play like I trade. I play the odds, I play the game well, and the only way you can win big is to gamble, but I don't gamble. You understand that? So if you're trying to make a lot of money trading Forex, all you have to do is take crazy risk. But that's the dumbest thing ever. That's the dumbest thing ever. Don't try to win big. Play the game. Think of it as a golfer. Let's say you're a professional golfer and you come in 42nd place every tournament. Are you the world's best? No. Are you in the top 10? No. But here's the thing. You have a career that's 4 days a week. You fly around in your jet. And you have to spend the whole weekend at a private, beautiful country club in an exotic location. And for this horrible sacrifice, coming in 42nd place every time, they barely even put you on TV, you probably make $4 or $5 million a year. Nice! And you want to do that until you're 72. Okay? You're not hitting it longer than everyone, right? All this kind of stuff. You're just putting the ball in play. You're hitting the center of the fairway every time because you're not over swinging. You're not risking things because you need to get your name on the trophy or you be in the Hall of Fame or you're just playing the game. You never hit the sand trap. You always go for the center of the green. You always two-putt, right? It's really, really, really boring. And there's no limelight. You're not going in the Hall of Fame, right? Fans are not lined up to get your autograph. But you're like, but I smack a ball around for $5 million a year, okay? That's kind of the attitude you want in Forex. 3/4 swing every time, hit the fairway every time. You're never in trouble. You're never in the woods. You're never in the sand. You're never in the water. It's really boring. Really, really boring. It's awesome. Like, I read somewhere, I can't remember what, but like the amount of money you make in the PGA if you always played par. And it's phenomenal. You never made a bogey. You never made a birdie. All you did was play par. Like, you're not even top 42, right? It's amazing how much money a golfer makes if they play in the PGA and they never make a birdie, they never make a bogey, they just play par, 72 every round. And it's like, yeah, you only made $3.5 million last year. You're like, what? What? And the funny thing is about that golfer, they're usually not even golfing on Sunday. They're only golfing 2 or 3 weeks and they don't make the cut, but they're still getting paid. And you're like, oh my God, you're kidding me. Wow. So anyways, you need to be the journeyman golfer. Okay? You need to be the journeyman. Just the one that shows up every time and never does horrible. Okay. Let's move on to something different. Let's get out. Well, you know what? Someone said pound CAD. I don't even think I have a pound CAD, do I? Well, I won't do pound CAD. Well, we just did pound Aussie, so nah, you got the idea. What else? Well, let's just do this one really quickly. Whoa! Okay. Great. This week's swing, M3 to the target, done. Last week, almost. Week before, not quite. So I don't know what this is doing, if it's going to do the next or not. All right. Let's go to yens. I guess you want to see yens for sure. Naomi says, but that makes you average. Yeah, I guess so. Spend all your time, if you want to be different, focus on a philosophical point of view or something, right? Okay. All right, so I told you last week I'm very, very, very worried about yens coming down this week. What do you think of that? This is what I needed. This is what I was worried about. This is what I needed. This is what I was worried about. Okay? Is there something going on here? Is there a correlation? Seasonality. Why worry? Seasonality. Okay? So, hey, Richie, one good way is to lose it. No, it's funny because I have friends that have like grossly significantly more money than I do. So, you know, I'm the pauper. One guy's like, "Oh, look at my McLaren." I'm like, I thought your McLaren was green. No, that's my other McLaren. Right? That's my friend's neighbor. He's like, "Look at, I got the new McLaren." You got the new, what? So you got rid of your other McLaren? No. Like, I don't have multiple McLarens. I'm just a humble college kid, right? Or like my other friend, he tells me he bought the new Bentley SUV. And I'm like, oh, that's nice. He's like, what is it like to drive? And he's like, I don't know. I haven't driven it yet. I'm like, you just dropped like 300K on a Bentley and you haven't driven it yet? He's like, no, it was 500K. I'm like, okay, 500,000. He paid euro, right? 500,000 euro for a Bentley. So when does it arrive? Like, did you order it right from the factory? Like, what did you have customized? He said, oh, I'm having it armored. Like, you got the new Bentley and you haven't driven it. No. And it's being delivered right. And you paid 500K for this thing? And he's like, it's the nicest one. And you're having it armored. Does that include having it armored? He's like, no. Well, what does it cost to get a Bentley armored? 500K. So I'm like, wait, you got a new Bentley. You've never driven it. You had it all customized, all custom made. And now you're having it armored. So you're into this car, which you've never driven, for €1 million. He's like, yeah. When do you get it? I don't know. Didn't ask. Right? So here's the funny thing. For him, it was $1 million. I wouldn't spend €1 million on a car. But he's got something like 35 cars in his garage. Yeah. So like, how do you stay humble? I don't even have a car. I drive a golf cart. Why? Because I'm conservative. I have a nice golf cart though. Nice. You're like, damn, son, that's a nice golf cart. Yeah, you like the kickers? And I turn up the radio. Yeah, it's got Bluetooth. But like, I don't have 35 cars in a garage, right? I have a retirement account. I don't have 35 cars in a garage. I have a college savings account for both my kids, right? I don't have 35 cars in my garage, but I'm paying like $1 bajillion for a Harvard education so that I could be an inspiration to my own children. Just a regular dude, man. I'm a car guy, though. I do like cars. They're not more important to me than my children's education, my children's future and lineage. They're not more important than a lot of things. Right? So, yeah. I could have bought a beautiful Italian car. Instead, I bought an education so that I can be an inspiration to my children. So as my children, so I've been at Harvard now for like 6 years. And coincidentally enough, their very first homework started coming out about 6 years ago. So they were learning how to multiply 6 years ago, right? Right? And they're doing their homework and I'm doing my homework. Their whole school life, Daddy's been doing homework every single day, sweating bullets over exams, up all night and on weekends writing papers. And to them, it's just commonplace. So now my children are in middle school. They're in the Genius program, and they're straight A students. My son is like, most of his classes are over 100% because he does all the other stuff. And not the regular program, they're in the Genius program. So I just learned the other day, when they go to things like lunch, because they're in the Genius program and they're so busy, guess what? The school allows them, they just walk to the front of the line for lunch. There's like 100 kids waiting in line to have their turn to get their lunch in their trays. My kids walk in, they're like, step aside. And they go right in, they get fed immediately, and then they walk and go sit somewhere else. I'm like, oh my God, that's so awesome. Right? So straight A students, that kind of stuff. And I'm like, that's what I put my money into, because you know that that's not a coincidence. Right? That's not a coincidence. That they got from Harvard. That they got from parents that care. So I put the money there, and this is the output. I got a little bit smarter from Harvard. My children have grown to be geniuses. That's where I put my money. 35 cars, Not interested. I don't think I could do it. But, you know, things can change, right? They get brain burgers. But isn't that cool? Like, that's what I care about. 35 cars. Okay? 35 cars you don't drive? Okay? I haven't got to the point where I don't care. Okay? And I don't know if that's even something I'm trying to do. I don't think so. Okay? Okay? And also another weird thing, 2 out of the 3 billionaires I talk to on a regular basis are very, very sick. Hospitalized a lot. So I don't think it makes them feel any better. All right, so yeah, let's move over to the dollar. So you get it. Anyways, yen strong, not good. So I'm getting worried about the third week of November. Wink, wink, nudge, nudge. Remember 6-7 months ago I said, I don't know when I need to be worried, but I'm going to be worried around the third week of November. And if we can get through that on a positive note, then I'm going to be worried about the third week of December. Okay? Eva says, you don't have to be a genius to be rich and happy. Sometimes it's luck. There can be an element. I would say, though, usually you're standing on the shoulder of giants. So like your daddy left you a lot of money, or it's not even money. Your parents left you things like appreciation for work ethic and planning. Right? And if you were left the money, that's luck. But somebody made the money and it was not luck. So I do not buy into the belief that some people are rich just because they're lucky. I do not buy into that once whatsoever. Luck can be a big part of it, but you'd be surprised. Like the people I know made their money. Now, one guy, his dad made all the money. There's no doubt about that. But he got a good education because his dad had a lot of money. So now he's fairly smart. And now his kids, and by coincidence, even though he's Australian, his daughter ended up going to Harvard, right? So, interesting. But now it quickly turns from luck to lineage, right? Where the luck has been passed through generations now with money. So now, you know, he owns an apartment building and he lives in the penthouse, and movie stars and superstar athletes own apartments in his apartment building, right? So like he's got some FU money, but his dad, I don't know his dad's story, except his dad way back in the day bought up a bunch of real estate, right? And owned a bunch of real estate, developed all the real estate, and became insanely wealthy. Then in the 80s, the Japanese came in and said, we want to buy everything from you and we want to pay you too much money. He's like, heck yeah. So he sold it all to the Japanese and went from filthy, stinking rich to, you know, insanely, grossly rich. And then 20 years goes by, or even less than that, 10 years go by, the Japanese economy collapses, and the Japanese go back to him and like, we will sell it all back to you for ridiculously cheap. And he said, hell yeah. So he bought it all back insanely cheap. And now it's like, FU times 10 rich. And then dies, you know, because by then he was old, right? And left it all to his kid. And then his kid's rich, and then his kid makes money, and then his grandkids are rich, and they're super educated. At some point, like, was the first guy lucky, or was he tenacious, or did he have a vision, or was he smart? Like, there's some luck, especially if you inherit it, but I don't consider that luck. I consider that investment. But I've never come across someone, well, I can't say that. Like, Google type situations, right? Like you were working for a company, it got bought out, boom, you made a ton of money. Well, you were smart enough to work for a good company. Or maybe the company was good because they were smart enough to hire you. But it does so like a friend of mine, he went through an IPO, made a lot of money. Great, worked for another company. And then Google said, come in and work for us. And he's like, no, I got a good job. I'm already happy. They're like, no, come in, make us a job offer and we'll beat it. Make us an offer and we'll beat it. And he said, what are you talking about? Come in, we'll show you what we're doing. And then you tell us what your price is and we will beat that. So he goes, sees that they're going to put him in the best part of the Google project, working on the search algorithm and stuff. If you're a coding nerd, this is it, the epicenter of coding, right? They're like, okay, you're going to work on the most important part of Google, and you're going to tell us how much you want to make, and we'll beat it. So he says, gives them a stupid number, and they're like, boom, we'll beat that, and we'll throw stock options on top, which this was before the IPO. So even though he already made money on his first IPO, Google hired him, paid him too much money, put him in there, and so like 6 months later, he's got like $140 million in the bank. Boom! Was that luck? Well, he also happened to be the smartest guy in the room, no matter what room you put him in. So like, I had luck happen to me, so maybe there is some of that. I don't think it changed my life though, but I had a job after Cisco because I was doing research for a startup that I had, a startup idea that I had, but I realized I needed domain experience. So I worked for a consulting company very briefly because my new technology was based on that industry and I wanted work to see how it would actually be applied. So I took that job and I said I'd take it for 6 months and so I can learn. So I took it for 6 months. Like literally the last week I was going to be there, they got bought out. And like, oh, really? I was like right about to quit. And the CEO came out and he's like, oh, we were purchased by a big company back in New York. I'm like, oh, cool. They're like, so everyone gets a bonus. I'm like, really? I open it up and it was 1 year's salary. But I only worked there 6 months. So I took that and started my first startup. So luck can be a part of it, but I don't know. But I think it's pretty rare. And I would have done it anyway, somehow, some way. Okay? So it's just like, luck is important, but in my life experience, I haven't come across where luck made it happen. Luck was part of the equation, but I've never seen anyone. I'm thinking about it. Anyone. I know a lot of successful people. Lots of them. Like amazing amount. And it just doesn't, it's not luck. Most of it is like either really big brains and a work ethic, or like me, a moderate brain and a work ethic. Okay? But like my personal friends that I had through college and stuff, they're all, well, not all, almost all are insanely successful, but they were all smart. That's why we were friends. We all have different backgrounds. They're all hard workers, all of them. Even now, they're successful, right? Driving their dream cars, living in beautiful homes, and they're working nights and weekends because they're managing divisions and stuff now, right? But luck, if you're born smart, that's luck. But what I'm finding is, in my world anyway, so I mean, it could be bad luck that you were born in but see, like, I lived in a tiny frickin' town with nothing. Total cultural and mental isolation. Was it luck that I dragged myself out of there? Hell no, right? So you could be born in a small town in the middle of Timbuktu, or near Timbuktu, just the outskirts of Timbuktu. Right? Now, you might be unlucky if you can't get out because people don't let you out. But so there's luck that I was born in Canada. And in Canada, even if you grow up in or you're living in a tiny little town in northern rural Canada, at least I was lucky enough to have the freedom to say, I'm getting the hell out of here and I'm changing the world. And I did. So you can have a lot of unluck if you get to the border and there's people with machetes and machine guns that are preventing you from leaving. Okay. All right. But everyone I know is a hard worker, and everybody I know is very smart. Okay? Allah is your teacher? You're lucky to win the lottery. Yeah, but that's not success. Or like robbing a bank. That's not successful, right? Look at all the money you stole. So what? I'm not interested, right? Was that my dad a Forex trader? No, he was not. Now, he traded with me for a while because I got him into it, but no. So anyways, guys, I would not focus on luck. I would not focus on luck. You have a $5 trillion market in front of you. I hope you fully appreciate this, guys. $5 trillion a day. The market goes up, down, or sideways. So you have three choices. Now, it can go up, down, or sideways minute by minute, depending on what you're staring at. So you can make it even easier. One choice. These market conditions are favorable for this going up, or these market conditions are not favorable for it going up. That is my advice to you. Make a decision. Are these things going up right now? You're like, no, not really. Maybe. Well, make sure they're all in the same time frame here. Are these market conditions favorable for going up? And if you look at this and say, no, not really, then don't trade. Just be in it for the money. Just do it for the money. Are these going to go up? Doesn't really look like it. Okay. It's a better example of the yens. So let me go back to the yens. These are all going up or they're all going down. Or they're all going sideways. Okay? You see it? And you decide from a flip of a coin, you're going to trade when these all look like they're going up. Can you do that? And the thing is, I say patience and discipline. Starting now, they might all be coming down for weeks and weeks and weeks. Do you have the patience and discipline to stay on the sidelines? And then, at some point, they will stabilize. Do you have the patience and discipline and the tenacity to recognize that the falling has stopped? And then lastly, do you have the patience and discipline to use your technical analysis to confirm that the market is now going up again, making a series of higher highs and higher lows? And if you do, you start trading, buying every dip. What if that's the only thing you did for an entire year? Would you be profitable? If that's all you did, would you be profitable? Barry says luck is fake. There's luck involved, but it's not the catalyst for success. Never is. I'm going to ask you again. If all you did was confirm or deny that the market is bullish, and if so, you bought dips using your technical analysis, would you be successful over the course of a year? If the market conditions were bearish, you didn't buy. If they were sideways, you didn't buy. But your analysis tells you technically the market has turned bullish, so now you buy dips, you buy its support. Would you be profitable at the end of the year? Then why is it you don't do it? That's your big $1 million question. Why don't you do that? Oh, I'm really unlucky. Get out of here. Then that's all this is. Or you're a bear. You just do the opposite. Are these market conditions favorable for being a bear? Yes. What should I do? Sell rallies at resistance. Done. And when it's not that way, you don't do anything. If you already know it will lead to success, then why don't you do it? That's what I think your meditation and your bourbon and a cigar and staring into a fire should lead you to. Why don't you do it? I need to get rich today, Wayne. I have to get rich now. Quick. Well, that's not my problem. And you know the math. I've shown you the math a million times. It doesn't work that way. What are the two things required, absolutely required, that determines the amount of money you will make? One, how much money did you start with? And two, how long have you been trading? Not have been, but will be trading. How much money you have determines your lot size. And it will grow at a predetermined rate. It's labeled G for growth. R would be like the rate of growth and whatever. So, if you know the starting balance, and let's say you make 1% a month on average, then at the end of the year, you know how much you've earned. And then at the end of the second year, you know how much you've earned. And at the end of the third year, you know what you've earned. By the way, if you make 1% a month, how much do you make per year? Ha ha ha! I knew it! Wrong! It's not 12. Why not? It's not 12! Trick question! No, make, meaning on average, Nahomi, you bring home 1% a month. Winners minus losers, you're up 1%. It's not 12. What's the answer? I don't know the exact answer, but I can give you a pretty good guess. Compounding! Yeah, 18 to 20. 18 sounds right. 18% a year. Ho 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 ho! Right? That's my, by the way, when I read Winnie the Pooh to my children, there's like 10, 12 characters. Every one, I did the voice. And that's my Tigger voice. Hoo-hoo-hoo-hoo! Bouncy, 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 bouncy. The wonderful thing about Tiggers is I'm the only one. Hoo-hoo-hoo! Yeah. So it's like 18 to 20. It compounds, guys. The secret to success. It's the opening quote in my book. The most powerful force in the universe is compound interest, according to Einstein. So what if you are planning on that? Let's say you're better than 1% a month. What if you do 5% a month? That's 100% a year. So you should be trying somewhere between 1 and 5%. Mike, no, that's wrong, Mike. You have to compound it. You have to compound it. You're not compounding. So 5% a month or compounded over 12 months is, I don't know, 86% or something like that. Or 112, okay, whatever it is. So all you need to do, guys, is figure out what's your average. Is it 1, 2, 3, 4, 5? If you're doing more than 5, you're taking too much risk. Okay? Right, principal and, well, return. Not, well, in that case, it's not interest, but yeah. But anyways, so that's the two things you need to worry about is how much money do you have to start with and how long can you trade? 1 year, 5 years, 10 years, 20 years? You will find that depending on how much you start with, in 6 or 7 or 8 years, it's way more money than you need. You're way wealthier than you need. Whatever you think you need now, you got way more than that. So now you just got to really throttle back the amount of risk because you know it's just a matter of time. Okay? No, it's not necessarily interest, although that does get put in there. But no, what I'm saying is it just compounds. Right? It compounds. It gets bigger and bigger and bigger and bigger. Okay? Right. So Ron says at 5% a month, you make about 80% return. You have your original 100%, plus now you have 80% more than when you started with. Okay? So it's like 5.5%. It's just under 6%. If you do 6% every month, you will make 100% return per year. So I don't know. I know the math doesn't quite work out. So if you did 3%, you'd be up about 50%. But something, whatever, right? So the thing is, guys, that's 50% a year is enough. You just need to add more years. So now 50% a year in the first year, then 50% the second year, and 50% the third year, 50% the fourth year, 50% of the fifth year. You're way beyond what your original dream was. The thing is, you're not thinking 5 years is the problem. Or you're willing to take crazy risks because you don't have any money. Well, here's the problem with you risking too much now because you don't have any money. So you start risking a lot. You're taking lot sizes that are too big. And then you think you're going to go to a rich person and say, look how much money I made. I can do this for you. And they look at it and they're like, they see the risk that you took. And now they equate that to you're going to take that kind of risk with their money, but they already have money. They don't want the risk. They want a consistent return. They want something they can budget on. They want to make sure their principal is safe. And they're like, no, I'm sorry, I can't invest into you. And the only reason you would do all of this, guys, is because you're undercapitalized. Right? You see what I mean? I said, how much money do you start with? Well, let's say you don't have any money. So all you should try to do is like 2 or 3 or 4 or 5% a month. Do it for 3, 4, 5 years in a row. Yeah, you're going to have to sacrifice 5 years of your life. But you're like, look, over the course of 5 years, all kinds of things have happened in the world. And we have the ebb and flow of seasonality, the ebb and flow of cycles and political elections and black swan events. And through all of this, month after month after month, you produced 3%. And you're like, yeah, look, but it was only on $1,000, but that was the vast majority of my net worth. And that's all people care about. And they're like, really, through all of that, you were consistent. And you're like, yeah, because I don't take any risks and all that kind of stuff. And I'm happy to take losses when I'm wrong. And I let all my winners run. My track record shows all of that. And you can look at my history and see that I can produce a steady flow in income and never really have a principal at risk. And they're like, oh, now I'll give you money. And so 5 years from now, you laid down those sacrifices to get the experience. Now you show the rich person that that's what you can do. Now you're capitalized. So now you do that another 5 years and you have way more money than you ever thought you would need. Well on your way. Yeah, it's going to take you 10 years. So what? Right? Right. So Michael, what I'm saying is, instead of increasing your lot size, increase the amount of time. There's only two things that matter: how much you start with and how long you carry that out. So I'm showing you like one thing. I said, look, if all you did was decide whether you're a bull or a bear on these yen pairs, and then you simply waited for the proper market conditions before you traded. So if they're coming down, you might go 6 weeks without even a trade. But once it starts to consolidate, you're like, oh, now I'm getting ready. 2-3 more weeks go by. You haven't traded for 2.5 months, and all of a sudden now it turns bullish. Trade, 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 trade. You make 8% on that month. Average it out. 2.5%, 3%, 4.5%, whatever it is. You're like, boom, right on target. And then the market conditions change, and you're like, whoa. You back off. And all you're doing is being extremely consistent. Not right. There's no bragging rights for being right. So if you traded and made money, or you didn't trade, that's, on the long run, you're very consistent. People can see what you're doing. You're like, oh, all you did all year was buy yens. You're like, yeah, well, that's only half the story. When the yens weren't rising, I wasn't buying. And they're like, oh, well, that makes sense. And you're like, of course it makes sense. They're like, how do you know when to buy? Oh, well, that has to do with a lot of things like central banking policy and seasonality, but I use technical analysis to confirm or deny this, and then I buy in an upturn when there's dips. And they're like, oh, well, that makes sense. You're like, I know. I know it makes sense. You see what I mean? This is what you need. It's not fun, it's not exciting, but it's profitable. And then you can get better, and you're like, well, if these yens are moving, what about the Swissies? And why do the yens and Swissies move? And why are they correlated? And what else is going on? What else should I... Just imagine how good of a trader you'll be 10 years from now. Just imagine how amazing you will be. And by the way, did I say you had to be in front of your charts 15 hours a day to do all of this? You could open your charts and say, oh, the market is in a bearish situation this week, and now you're done. What'd you do all week? Nothing. Then the second week goes by, and you're like, huh, still bearish? Nothing. Done. You're done for the week. Spending time with your kids, doing chores around the house, getting a tan, spending time in the children's ward at the hospital, bringing them candy and letting them pet kittens. And all of a sudden you're like, ooh, market stabilizing. I should get ready. Clear the schedule. Clear the schedule. Make sure my powder's dry. Right? And then the market turns bullish. Double the powder! Shorten the fuse! We're at war! And now you go ape crazy for the 2 or 3 or 4 or 5 weeks that you're in a bullish market. Now you trade like a son of a gun. Make it rain pips. Because you know the dry season's coming. And when it stops raining pips, you take all your money off the table and you walk away. And you're like, I'll see you in 6 weeks. Okay? So you've probably practiced your way for years, and you know it doesn't work. If you haven't admitted that, you need to have a conversation with yourself. And then listen to Uncle Wayne. I'll take care of you. Pachow! Well done, Prince. So I got to go because we got some swing trading to do. Yeah. So I'll see you over there, swing traders. Swing.fxbootcamp.com. Peace on earth. May the pips be with you. May your profits be above average. Please leave likes. Please leave comments. If you wait about 22 seconds, I'll post the link to this recording. Please stay the extra 22 seconds. I will share the link to this recording so that you can leave a comment right now. Okay? Leave a comment right now in this video. I'm about to share the link. So stay in this chat for another 22 seconds. Thank you.